Welcome back to Squawk Box. Rick Santelli here live at CME HQ with October breaking CPI news. Headline: CPI expected up 0.2, delivers up 0.2, exactly as expected. Strip out inflation, up 0.3, exactly as expected. If you look at year over year, 2.6 as expected, but 0.2 hotter than the rear view mirror. 0.2 hotter than the rear view mirror. That is basically a very important issue to pay attention to, considering that this really has been, out of all the inflation metrics, following a linear path down pretty much every month this year. So we see that pop. If we look at year-over-year core, ex-food and energy, 3.3. And once again, it's exactly as we expected, like all this data was, and this one does equal the rear-view mirror at 3.3. 3.3 is the highest since it was in May at 3.4. We've had 3.2 2 months in a row prior to this. So you could say it's a bit warmer. Now, if we look at the indexes, and I like to look at the indexes once again continue to move higher to all-time forever highs, whether it's the index headline or the index core. Now, I very rarely look at real average hourly earnings, but they are so lofty. On a year-over-year basis, 1.4, same as last month, but that's the best since June of 23. That's real hourly earnings year-over-year. If we look at real weekly earnings year-over-year, at 1.4%, that's the best since March of 21. Real means inflation adjusted. We need to pay attention to that, as the equities have been on a tear for the most part since the election. We see that yields initially moved a bit lower. I would suspect that that's going to reverse a little bit. We see pre-opening equities, of course, have popped as well. The market seems to have it right. It saw yields run up a little bit on inflation yesterday. And these numbers, though as expected, certainly don't have a frigid air about them. Andrew, back to you.